Recently, I've had some new clients come to me who have some pretty rough credit scores, and they know it. So I want to share with you today how I guide them through on having really low credit and trying to figure out a way that they can purchase a home. My name's Miles Pitcher. I own Superior Lending. So some of the challenges with low credit is it's going to give you a higher interest rate, very limited in your loan options that you can do, and most likely you're going to be required to put down a larger down payment. So we typically go to FHA for our low credit clients. And when I talk about low credit, I'm talking 500 to 579. If you're below 500, I don't have options for you. You need to find a private money loan. If you're above 579, 580 plus, then it becomes much easier to get you into loan. 3.5% down payment, reasonable and almost a very good interest rate. And the reason why is 580 and above, we can run it through FHA's system called automated underwriting, where it comes through and it spits out a decision that says, yep, this borrower is approved. Whereas if you're under the 580 mark, 500 to 579, we have to do something called a manual underwrite. And let me share with you a few of the criteria or hoops that you have to jump through on a manual underwrite. Let me make this bigger. So number one, down payment is going to be bigger, 10% down rather than 3.5%. And I apologize for all the mortgage nerd info here, but front-end ratio, which means 31% of your gross income will go to pay your new mortgage payment. That is much lower or tighter than what a normal FHA loan is. Back-end ratio includes all your other debts. So new mortgage payment plus old debts, 43% of your gross income or less needs to go to pay those. The credit report needs to be reviewed. We're looking to see that you have stopped having late payments. Collections and judgments are being resolved and taken care of. And then if there was a bankruptcy or foreclosure, the underwriter will dig into and look at the reasons why that happened. They will also want to see stable and reliable income for 2 years, pay stubs, tax returns. If you have been renting, they are going to want to see that your payments have been on time, and most likely that rent payment is very similar to what your new mortgage payment will be. So there's not a massive payment shock. Reserves are super, super helpful. 3 to 6 months of reserves, and then any bad things on your credit will have to be explained. And then they're really just looking to see that you have demonstrated some financial stability and through your employment and how you are dealing with your current debts. So I also like to explore with my clients very much on solutions on how to boost that credit score up over 580 so that we can get a standard FHA loan rather than doing a manual underwrite. So payment history is a big deal. So we really focus on trying to make sure that payments are all on time. We look at the proportion of credit card balances and we try to get those to a utilization of 30% or less. This is one of the quickest ways to boost your credit score is to improve your credit card utilization percentages. Here's an example. If your balance is at 4,000, your limit's at 5,000, that ratio is at 80%. It's pretty high. I also just recommend, hey, get on a call with us. We're happy to look at things. We don't have to do a hard credit pull. We can do a soft pull, see what's going on with your credit, and help guide you on if we can make an FHA loan work with a manual underwrite, or do we need to do some credit repair. Again, my name's Miles Pitcher. Here's how you can get a hold of me. My team's always available to help run through scenarios and give you advice, even if you're in a state where we aren't licensed. Have a great day.